Update on Chinese tech stocks. What will happen if US tech stocks fall another 30%? Really? Have Chinese tech stocks really bottomed? Hang Seng Tech Index was around 5,680 points on 17 December 2021. Even after almost 20 days, Hang Seng Tech Index did not show strong reversal signal after some key rate cuts by PBOC. Morning session early witness was led by witness in Alibaba, GDS, Ali Health, Bilibili, JD, Xiaomi Weibo, BYD Electronics, etc. The number of stocks that declined is almost 3x as of 10 a.m. Hong Kong time. And by 10 a.m., Hang Seng Tech Index was already down 1%. By 12 p.m., Hang Seng Tech Index was down over 2%. And we saw that number of stocks that declined exceeded the number climbed significantly. Here is just a recap of some of the regulatory news announced last year. Remember that I said before that there are mixed signals coming from China during my previous YouTube videos, like the mixed messaging coming from certain regulatory bodies in China, as well as the red flag concerning Evergrande being issued a notice to tear down 39 buildings at Hainan Ocean Flower Project. All these are worrying. And we know that our very famous George Soros, he has exited many of the investment in Chinese tech stocks around mid-2021, and he continues to sound alarm over China's developments and raise the possibility of internal conflicts among certain Chinese party members in January 2022. As for Mr. Xi, who is set to take on a historic third term as China leader in October 2022, we'll have to see if supportive monetary and fiscal measures will be continued to be announced in first half of 2022. Also, we have to see if there are any mixed signals out, like what George Soros has sounded out. But to me, I still remain a China bull and will track the news. But my long-term viewers will know that buying Chinese tech stocks would also require a view on whether China-US tensions will subside in 2022. China and Russia are working closer than ever, and this is something that US would not want to see. If you have been listening and watching financial news, there have been constant coverage of Russia building up troops near Ukraine. While I do not know if the news on potential incursion are true or not, but what I do think is happening right now is the constant coverage of this deal is to test the China-Russia relationship as well. I do not think US would want Russia to be too close to China. This is why there is a warning that should Chinese firms help Russia, there could be potential sanctions. Regardless of how the news concerning Russia and Ukraine will evolve, I see that Chinese firms, including Chinese tech firms, may be at the mercy of more actions, be it practical sanctions, technology access, market access, etc. With global hedge funds still signaling on the short selling of Chinese tech stocks, as well as US actions against that of China, I stopped adding Chinese tech stocks in small volume despite being a China bull. This is a case given my current portfolio allocation in terms of risk capital allocation. However, I do not deny that certain Chinese tech stocks are at good discount given future growth prospects. But for people with zero capital allocated into Chinese tech stocks, be it Chinese tech or US tech stocks, it might be a different way to operate one portfolio. The thoughts that I have now is whether US small and mid-cap stocks, if they fall another 30%, will this trigger another fall in Chinese tech stocks despite their low price and certain stocks being at very attractive prices? Well, if you have been watching my YouTube videos, you know that I like C Limited. But so what if Cathy Woods go and buy C Limited shares? There's still a possibility that C Limited could potentially fall to 100 USD. Right now, what I'm going to do is I will wait for the 4Q 2021 result. I definitely think that coupled with the US-China tensions and the pressure on US small and mid-cap stocks, certain Chinese tech stocks may see another down leg. For instance, the news concerning Alibaba registering 1 billion Alibaba ADS have already caused some market panic for Alibaba shares. And we saw that Alibaba US shares went down 6% overnight in US trading, and it's only around 5.6% above 52 weeks low. The question to think through is, will Alibaba share price collapse to around 80 USD, jar with the intention of short sellers? And that this will let them to continue to short sell other Chinese tech stocks as well? The current price for Alibaba ADS is 114.82 USD. Near-term support is at 108.7 USD. The strongest support S2 of around 80 USD represents another 30% fall from current price of 114 USD. Think through. As for Tencent, it's already down 36% in a year from last year Feb. But if 4Q 2021 results do not please the markets, one may fear that short sellers will take the opportunity in terms of the weakness in Alibaba to also short sell Tencent as well. And this will cause Tencent to potentially retest with 2 weeks low of 412. So far, there isn't too much worries on this, but I think that it would be best to keep my cash position and not acquire Tencent yet unless it tests 360 Hong Kong dollars or its result for 4Q 2021 demonstrate a clear growth rate. So far, my sense is that its growth rate is unlikely to beat US big tech like Microsoft, Apple, Alphabet. And if Tencent 4Q 2021 results do not please the market and it falls and touches the 360 Hong Kong dollar, this means there's another 25% fall. A worrying, but something that we have to realistically face. There have been reports saying that Tencent is intending to acquire Black Shark, a gaming mobile handset company, so that Black Shark can focus on AR/VR gadgets manufacturing. This is consistent with the metaverse game plan if this happens. There are even stories reporting that Tencent intends to privatize Douyu, the second market leader in terms of gaming streaming company in China. So it's better align Douyu's strategy with that of Tencent. However, Tencent so far has refuted this news. It's important to continue watching the news from Tencent as well as the financial results and the share price performance to make an assessment. But right now, I'm not considering to acquire any Tencent shares unless it's at very, very good discount and attractive price. As for Xiaomi, it's already down 42% within a 1 year period. After failing to breach 19.2 Hong Kong dollar on the upside, I mentioned that downtrend pattern continued and has since broken its IPO price of 17 Hong Kong dollar, though I am optimistic of its long-term business potential. But the current management performance at the 3Q 2021 earning conference had disappointed, which they sound so much worries over the chip supplies concerns. We have to watch out to see if the support around 15 Hong Kong dollar can be held. To be certain, its P multiple for Xiaomi right now is around 12x. It's at all-time low. But market is clearly expecting a very bad set of 4Q 2021 results. For me, I can only watch on the sideline to see if Xiaomi can beat expectation. There's no need for me to add any more shares of Xiaomi given current trend performance of Xiaomi. Like what I say, I'll wait for the 4Q 2021 results to make a reassessment if I want to add any more Xiaomi shares. Other things to look at is Xiaomi market share in mobile handset in various countries, in China, in India, and other parts of the world. Other things to look at is the gross margin for its various business line like IoT, mobile handset, and whether chip supply problems have been mitigated. These are very important points to look at if one is interested in acquiring Xiaomi shares. As for Netease, a gaming company, it's the strongest performing stock out of Tencent, Alibaba, Xiaomi on a 1 year time duration in terms of the share price performance, as it was only down 20%. Given price momentum of Chinese tech stocks as well as the US tech stocks right now, plus Netease around the resistance level of around 100 USD, I prefer to stay on the sideline until 4Q 2021 results are out before I reassess Netease stock again. My prediction is that tough Chinese tech regulations will come to an end in 2022, and there will be clarity on overseas investment rules by domestic investors from China, meaning the regulations for online brokers like Futu and Tiger Brokers will be out in 2022. But do note that I am a Tiger Brokers retail shareholder. I do expect that there will be more fiscal stimulus spending coming from China authorities given the economic slowdown faced in China right now. With inflationary pressures abating in China, the monetary policies used by POC will be stronger and larger quantity in face of rate hike situation in US, UK, and certain countries in the world. Given my current portfolio allocation into Chinese tech stocks, I chose to stop adding Chinese tech stocks more to manage my capital and risk exposure. Though I have to admit that current price for certain Chinese tech stocks like Xiaomi, Tiger Brokers, Huya are pretty attractive. But given the possibility of another 1 to 2 legs down for US small and mid-cap tech stocks, one still has to be careful and manage one's portfolio based on portfolio management's basis. I never believe in all in on any particular stocks, no matter how high the conviction is for that particular stocks, more to manage my risk. As always, this should not be construed as any investment or trading advice.